All right, guys. So this is getting critical. I'm not sure many people have an understanding of what's unfolding right now. Maybe if you follow me on Twitter, you've seen my 100-year charts. You've seen my SPX measured in produced price index, a proxy for inflation. You might have seen my SPX measured in gold. And this is critical, guys. And then I read these things. Oh, how you could price NASDAQ in sausages or in carrots. Guys, stop it. Gold is a major asset class. So there's growth stocks, there's NASDAQ, SPX, which do have value instruments in there, right? There's sectors which are underweight at the end of a bull era in growth stocks, right? So let's say in the SPX, in those 12 sectors, towards the end of the growth cycle, a 10-year bull run, like here from 2011 all the way to 2021, well, the sector, the tech sector, the web, all that, they're probably going to be bloated, right? It'll be a bigger market cap of the entire index. And the smaller ones, basic materials, energy, they'll be 5-8%. But that's the balance. So within any index, there's a balance where once it's too stretched in one direction, and then when you zoom out, eventually it cannot stretch two more, and there's a reversion to mean. And it's more than that because of human behavior, because of these tidal waves that shift. Once they turn directions, they don't turn very fast. It takes months and months. This is a monthly chart, guys. So just hold on there, and I'll deep dive into what this chart is telling us. This paradigm shift, tidal wave of capital flows changing slowly, what it means. And because it takes time to change, then on the way down, whichever trend, let's say we're going up, eventually there's an equilibrium point where it's fair value. But because this is such a massive ship, it will overshoot in one direction. Here is the dot-com bubble overshot in one direction, then it turns back. So just like there was an excess in tech stocks and growth stocks, eventually gold will be severely overvalued versus growth stocks versus the NASDAQ tech stocks. And that's when we'll start saying gold to 10,000, gold to 20,000. And then we get all these crazy projections, just like when the tech bubble here popped in the 2021, topped. Bitcoin was at, 65, 70,000. People saying, oh, 1 million, 2 million. When you start hearing this echo bubble stuff, these huge, crazy targets, and people start believing them. And that's when you have to see, okay, let's look at the chart. Is the momentum slowing down? And if so, then after that, what is the critical threshold point where the momentum has slowed down so much that it has now become vulnerable to the actual change in trend shift? And I'll show you exactly how that works out. So anybody who's new to chart trading, just set up, it's not astrology for men, just put the monthly chart on the log scale, probably, because all this stuff has moved exponentially. The 12-month moving average, the 36 moving average. You could put Ichimoku cloud, and just look at the price actions. So here I could hide everything. Right here, without even drawing any lines, I know here when my moving averages are coiled and tied together. Once the price starts trending and staying above the shorter term moving average, here is the 12-month. Then there's an explosion in momentum, and it's distancing itself from the longer term moving average. Eventually it slows down. The market needs a pause. The capital flows have went so much in that direction, then they just need a pause, and then the price action corrects and goes sideways. So correction could be in price, but it could also be in time. So this thing moves sideways. It dipped below the shorter term moving average, the 12-month, and as soon as it came and retagged the 3-year moving average above the cloud, it decided to say, okay, that's it, pause is done. And now it started resuming its uptrend. It did it again here in 2019 here in 2020. This is the first time the NASDAQ priced in gold. So right now, this is a ratio chart, guys. This is telling us, a ratio chart is going to tell you, if you had the choice in between two instruments and you were forced to hold either one, are you going to hold NASDAQ, speculative growth tech stocks, or hold gold, a value commodity, a major asset class that protects or tracks your purchasing power? You want to be in the one that's trending in favor versus the other one. So if this is going up, that's NASDAQ outperforming gold. Gold could be going down. Gold could be going up. NASDAQ could be going down, but going down less slowly than gold. And that will make that trend upwards. But it doesn't matter. You start here. If NASDAQ is outperforming gold and I'm forcing you to hold either one, then of course you would want to hold the NASDAQ all the way up. So here was the first slowdown in momentum. Really scary stuff. It didn't close below the cloud. It could have gotten a lot bearish here. This thing could have faltered here. But after that, the price decided to go back up. And here it could have drawn a trend line right here. And then it closed above. And here you have the melt up top. And everybody's calling for a new melt up now. This probably, I think this was the melt up top for the NASDAQ priced in gold. And you'll notice, guys, look at that, the dot-com bubble. Even with nominally, the NASDAQ is so much higher today than it was back in the dot-com bubble. Priced in gold, in real terms, it didn't even surpass the dot-com bubble. For me, the dot-com bubble is the bubble of all bubbles. When you price in gold, in real terms, that bubble has never been surpassed. And we see it today. So, because you got to remember this, guys. I'll take a small tangent before showing you my drawings. And after that, the final piece of element, which should really wake you up to this paradigm shift that's unfolding right now, is we don't measure in real terms. We have to measure in real terms because they keep adding digits, and that's the illusion. Oh, NASDAQ went up from $10 to $100 to $1,000, and you have this illusion of wealth. But if everything else around you had been adding digits, if your loaf of bread is $1, $10, $100, then even if the NASDAQ went up nominally, but everything else around NASDAQ went up nominally at the same speed, you're not really a winner, guys. So that's why you got to measure NASDAQ in something other than fiat, something which is being debased exponentially. So when you're measuring gold, you get to see the true value of anything. So that's critical. All right. Let's go to this chart, guys. So right here where we are today, after this slowdown in momentum, this melt up, it went back below the 12-month moving average. And what happened here, this rising trend line right here, I call the sleep mode line, 1 touch, 2 touch, 3 touch, 4 touch, back test, failed, and back down. This is super bearish. It broke down below this line here. So the sleep mode line is a rising trend. And once you're below the 12-month moving average, once you're below the 3-year moving average, once you're below that rising trend line, the market's telling you that the momentum has definitely slowed down, and slowed down enough that now the price is going down low enough that it's starting to challenge horizontal breakdown lines. I call this one the game over below this line. And that's not a place where you want to be, guys. Look, we just had a def cross right here. Def cross for the NASDAQ price in gold. And it's hanging that thinning cloud support. 1, 2, 3. It's been 4 months right above it. And this game over line is a pivot line where it's been tested here, here. So once you break out above that resistance, it becomes support. Here you see how it held the price up back in 2001. Support bounced, and then it closed solidly below. Came to retest it from below because it's resistance, and then it faltered. Resistance, 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 breakout, now becomes support. Support here. Oh, it's starting to falter below it. It's starting to show some signs of weakness. And now that conjuncture of support is the cloud, is that game over breakdown line. But there's nothing left after that, guys. You're below the moving averages. The momentum has slowed down. You've done your back test. You're at risk. This is what I call the no man's land, or the bad zone. You don't want to be long when the price is hovering for many, many, many months below those moving averages. It's just a dangerous, dangerous place to be. You want to be above. Look, here it is. This is when the NASDAQ was bottoming versus gold back in 2011. And then it stayed above the 1-year, 3-year, a golden cross, closed above a clear breakout line. And once it started moving up, then you had to go long NASDAQ versus gold. But now, guys, it's the inverse. Totally the inverse. This has to sink in, guys. Because look, NASDAQ lost from this peak here all the way down here. NASDAQ lost over 93% of its value in real terms. You do not want to hold through that. When I see people getting praised for sticking to their guns, it's total nonsense, guys. You do not have to go down with the ship. You do not have to. And remember, Bitcoin tracks this. It tracks this chart, these capital flow charts. So you gotta, if you think I'm convincing you that NASDAQ price in gold will drop, then you gotta be really, really wary about all the other instruments that track this, these capital flows. Bitcoin, cryptos, Ether, Shopify, all that stuff. It tracks this chart, guys. Gotta be really, really careful. Okay? I'll even overlay it for you guys. I didn't want this to be a new a Bitcoin thing there. It's more about what's going to happen to the paradigm shift in capital flows. But look, here it is, guys. Bitcoin tracks capital flows as defined by NASDAQ versus gold. So while Bitcoin could be rallying nominally, it hasn't done a new high. It's still 50 or 60% below its all-time highs. And if this falters, it could get dragged down with it. All right? Be careful, guys. All right. Okay. So here is below. This is the final part, guys. This is the game changer. This is a distance from the 3-year moving average right here below. It's that thick red line. It's telling you how far you are above in percentage above that 3-year moving average. So you see in a bull trend, you'll be, that's at 1994, the start of the blow off top. You're expanding away from the 3-year moving average. Look, the dot-com bubble was historically, well, it's never been that high, the NASDAQ versus the 3-year bubble, which are signs to, and that's what I told you about, the revision to mean, and then the FOMO or the excess in the other direction. Then it broke down. Right here, clear breakdown line. The momentum was breaking down, retest, and that's all she wrote, guys. Plummeted. Nice spacing pattern. Broke out here. Here's my breakout line, right? Then you go back long. NASDAQ instead of gold. Once this huge base broke out, retest. Even the momentum indicator gave you a clue that you could have gotten in a little earlier. Then it just exploded. But look at this, guys. Look at the distance from 3-year moving average. First explosion. Second, third. You could even make a case like this. While the price was going higher, it was having a harder and harder time distancing itself from the 3-year moving average. So that momentum, it could not explode as far up away from the 3-year moving average, even if nominally it's able to do new gains. Here was a breakout. 1, 2, 3, 4 breakout. False breakout. It failed. So this, for me, that's why there's a high likelihood, guys, that this is definitely the blow off top. A false breakout. And now it's just faltering. And false breakouts usually create strong moves in the opposite direction. And that's exactly what happened. Because look at this. This is the paradigm shift, guys. 2002 to 2022. A 20-year rising trend line. On distance from moving average. 1, 2, 3, 4. Breakdown. Convincing breakdown. Retest. Below the 3-year moving average. So that's if you're above this red line here, you're above the 3-year moving average. If you're below it, you're below it. This is not looking good. So you have all the symptoms of a blow off top. You have a false breakout, cross back through the apex, and now a breakdown of a 20-year rising trend line. This is insane, guys. So even if the price, you see, it went up, it went down, it went back up, you have a beautiful rising support line right here. And this is fuel. You know that you haven't reached a capitulation bottom because that capitulation bottom is probably going to happen once we reach an extreme to the downside. So until the price of NASDAQ priced in gold, expressed in gold, distances itself to the bottom below the 3-year moving average to the extent that it did back in 2002, the momentum downwards is not excess yet, right? We're just at neutral point right here. So this is fuel for gold to outperform NASDAQ. When it hits this line here, I'll say, okay, something's up. And NASDAQ might need a bounce. It might start basing. Something could happen. Here you see it started basing, went up, and then it faltered back on the retest of the 3 moving average, and then it went in even lower. So we're not even close to a bottom for the NASDAQ price in gold. This 20-year breakdown below the zero line should really crystallize in your head. Oh my God, this is happening right now. This is unfolding before our eyes. So there's just a few elements left. The momentum usually leads the actual price action. So we have a little bit of cloud support. There's this pivot line here, game over below line. But it could accelerate and it could really be nasty once it decides to close below that line. But the momentum is definitely telling us that unless NASDAQ is able by some miracle to close back above the 12-month moving average, close back above this wake-up line, close back above, there's probably a wall right here, above this ratio here, it has to undo all these bearish technicals for you to even think that it could start outperforming gold. All right, guys, I'll leave it like that. Hopefully this sinks into you, sinks the message I'm trying to pass across, and then make sure you're ready for this, guys. All right, thanks for watching.